What's up, everyone? Dylan here. I wanted to hop on and record another episode of the weekly introduction video. As always, I'm going to talk about my overall market analysis, some of the thought processes that I have to back up my thesis. I'm also going to talk about some of the upcoming plays that I am planning to take. With that said, we'll hop right into it. So you could see here on a weekly chart of ES that it has been straight down for 6 consecutive weeks. Okay. Although on a larger time frame, it looks like, it's just a steady downtrend. It has been very, very difficult to trade because there really hasn't been that much continuation on a shorter time frame. So I posted this tweet in the Discord last week. I thought it was very interesting, and it basically backs up what me and Carmine have been saying for the last several months. So you can see here that the S&P 500's average return following a down day is flat, and then following an up day is also flat. So like I said, you haven't been getting those continuation plays that, I was so used to, while trading in 2019, 2020, and 2021, right? You would have days, the majority of the days on, in those previous years, you'd have a nice breakout on, say Tesla, and then it was followed by multiple day bounces, right? You could have read that way easier than the price action that we've been seeing in today's environment. So when the market is in a steady uptrend, price action is way easier to predict. Okay, and it's been very, very difficult to predict the price action year to date. So essentially it says that basically this is the hardest year to trade year to date since 1932. So that's a very, very big deal. And for all of you that are struggling, just know that you're not alone. So I actually went back and looked at my statement from this year to date, and I saw that I've taken 14 long options plays. And what I mean by long is both buying both calls and puts. So I have played 14 different trades in the last 5 months when it comes to options on the long side. So don't get me wrong, I have sold some premium this year, but in regards to just on the long side, buying either puts or calls, I've only traded 14 times. And that's so crazy because I used to trade 14 times over a few days or a week. So even for myself, it's been very, very, very difficult to trade options. And with that said, I have gravitated towards trading mainly futures. As I said, I have sold a few puts and calls to collect premium. And then I've also played shares here and there. So like I said, me and the hedge fund in my office, there's a hedge fund that operates out of the office that I trade in. His name is Matt. Even Matt has been, very, 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 I can't think of the word, but essentially he really hasn't been playing options to the long side either. He's been just selling puts and calls here and there. So like I said, it's been very, very difficult action to capitalize with using options. So if you guys are struggling, just know that you are not alone. So like I said, technically on a weekly chart, it looks like an easy to read downtrend, but the lower time frames that you go on, you could see that, it's down, then up, then down, then up, then down, up, down, up, down. It's just not fluent, in my opinion. So something like this, right? A nice clean break up. I traded that. I will go over that, not in this video, but in another video. And then a nice, move down. Those are nice price action. Yet you have action like this, which has been very, very, very normal year to date, right? You have a low, you breach the low, right? A lot of people get short, and then boom, right? It's a fake out. Same deal, breach the low, fake out. Breach the low, fake out. Breach the low, fake out. So playing options on this type of price action is extremely difficult because you have the time decay to worry about. So if you're playing weekly options, say you try to short this low, right, when it breaks that low, if you buy puts here, by the time the options are up here, you're down, over 50%. So it's very, very, very difficult to play the short-term options with this type of price action. So with that said, I recommend sizing down. If you're used to playing with, say, $5,000 in capital per trade, try to, size it down to maybe half, play with $2,500. Or a really good idea, in my opinion, is to play further out expirations. I know a lot of you guys tried to play the 0 day till expiration or maybe 1 day out. Those premiums get crushed. Okay, so trust me, if you want to be a trader, for the long haul, and you want to live to trade another day, it does not hurt to trade further out expirations because you will not, be affected by the time decay as much as, the shorter term ones. So, just wanted to make that clear. So as you can see, 6 straight weeks of red. You didn't even see that during the COVID drop, right? This COVID drop back in 2020. You had 2 weeks red, you had a nice basing candle, and then followed by 2 more weeks. This, right, there hasn't even been, a green basing candle. This is technically a basing candle, but even that closed red too. So basically, it is a sell the rally type of market. Every single bounce has been getting met with selling since the beginning of 2022. So with that said, it's been very, very difficult to capitalize on bullish positions. So with this weekly chart, you can see that on these upper wicks, right, from the week of the 18th and the week of May 2nd, these upper wicks indicate that bulls tried to push value higher, but they got stuffed, okay? So bulls were trying to push value higher, but they couldn't sustain that value. So with that said, bears were able to take control and push, price down, and, with that, you get lower lows. So like I said, it's clear as day that bears are in control. So this brings us to this same exact chart that I looked at last week with you guys. So as you could see, this particular pattern did not hold up. We are now below because today's daily candle closed below that support zone. So with that said, you kind of got to just get rid of this zone and go back to the drawing board and try to formulate another plan. So I'm going to show you my new plan based on technicals right after this. But essentially, for the last video, we were down here. So I did expect this to be, a pretty good low. What I mean by that is I thought that this low was going to send value up towards this supply, which kind of, matched up with the top end of this parallel zone, right? If we make this a zone, right, just, somewhat around here. So I was expecting that this bounce was going to produce, enough buyers to step in, break above this 4,300 level that has acted as resistance on the last four tests, or last several tests, I should say, if you, look at lower time frames. I was expecting price to get up to 4,300, find some resistance there, but be able to hold value, maybe pull back a little bit, find buyers, and then make its way up towards this supply, which matched up with this resistance zone. Obviously, that did not happen, and here we are right back lower. So the reason I did not play the 4,051 bounce like I had originally anticipated was I had that stomach bug, so I was on medicine and I didn't feel comfortable playing it for that particular day. And B, I did not like how that move was faded so quickly. So for FOMC last Wednesday, we essentially rallied from 4,056 up to 4,300, right? 250 points in just 3 days on ES is a big deal. That's a lot. Then just 3 days later, we gave up the whole bounce and then some. So with that said, when you have such fierce selling and is able to give back all of the gains from a 250 point rally, that is not good for the bulls. Okay, so because there was selling that intensified in such a short amount of time, that 4,050 support level was not as quality. So that 4,050 support level did not show as high a probability as I would have liked it to. So, like I said, the fact that this low was only a low for 5 days, that did not give me, it gave me a sour taste, and I felt uncomfortable trying to buy at that 4,050 support, so I just held out. So today I entered 60 lots at 4,000, and yet again today we had somewhat of a bounce, right? Let's chart the 4,000. So 4,000. So today I bought at 4,000, 60 lots. Let's go to a 15-minute. You could see that it bounced nearly perfectly here. It was able to rally 45 points within an hour, which I thought was great. But then, what do you know? We roll over immediately, and then we're back testing new lows just a few hours later. So, like I said, the fact that all of these bounces are getting sold off rather quickly is not a good sign for the bulls. Like Carmine said today, he outlined what you want to see when looking for new lows to form. You want to see bulls being able to hold and sustain that value. Okay, you don't want to see a nice 50-point pop followed by an aggressive sell-off lower just a few hours later. Okay, that is not what you want to see, and that indicates that a low is not around the corner. So, like I said, you really, really need to see bulls being able to sustain value, and we just have not seen that all year. So, with that said, I'm going to show you why I'm looking at the 39.50 level for my next entry. So I entered 60 lots today at 4,000. That was my average cost. I did 20 lots at 4,001, 20 at 4,000, and then 20 at 3,999. My next purchase is going to be the same deal, 39.51, 39.50, and then 39.49. I have the limit order set there as we speak. And as of right now, they're for 25, 25, 25. So I have 75 lots sitting there. I might add to it if ES is able to hold value rather well in this 4,000 area. If we get a sharp decline right down to 39.51, which will show me that bulls were not able to sustain value, then I'm going to keep my size the same. So let's go to a daily chart. Okay, I'm going to use the same exact tool, which is right here, parallel channel. Okay, I'm going to draw it from here, right, from the high, all-time highs, to this high right here, right? Let's get that. Let's get it perfect. And then I'm going to draw it down to meet with this low here. So essentially, rather than manually drawing trend lines, what this one does is it gives you a trend line to match the exact degree angle from the top one. So basically, this is showing me where the next support can be. Okay, so it comes down to right around 39.50, 39.40-ish, okay? On top of that, we also have a level of horizontal support too. As I always say, the best plays come where you have areas of confluence. So I personally would not buy that support if it was just solely a support from this particular pattern. For me, it needs to line up with multiple other factors. So in this case, we have this horizontal level. Okay. So you could see it was that high, acted as resistance again here, and then again right there. So it's not the cleanest zone or cleanest level, but I do like how it basically, lines up perfectly. You could also put a rectangle too. You could see where this has, let's see, it's bounced pretty nicely in that area, and that's the top of it right there. So if this wants to dilly-dally around and then touch the lower, basically all I'm doing is I'm highlighting a nice area of support from early 2021. So that is where I stand now, and that is why I'm choosing that 39.50-ish level as my next entry. So beyond that, I also wanted to talk about the VIX. I talked about the VIX today. Essentially, since January 24th, right? This is January 24th. The ES has made lower lows. So it made a lower low on February 24th, and then an even lower low today, right? So here's one low, here's the second low, and here's the third low. Technically, VIX should have made higher highs when ES is making lower lows, okay? But that is not the case. So we'll go here. So VIX, you can see, since January 24th, it has made lower highs. So instead of making higher highs as ES is making lower lows, that's how it technically should be. Like I said, VIX has been making lower highs. So not only has it been making lower highs, but it's also been respecting these lower highs pretty damn well. So you could see it touched it there, 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 and there. So essentially, it's respecting that resistance line fairly well. I'm using VIX because it's on TradingView, but normally I use the VIX futures on TOS for charting. But it looks the same on there too. So this indicates that there's less fear per se, technically speaking. VIX indicates fear. That's just another little piece of the puzzle that I've found. My thought process from the last video, if you haven't looked at the last video, I recommend doing so because I talk about the fundamental reasons that back up this particular thesis. Okay. With that said, CPI is right around the corner. It's this Wednesday. Even if CPI data comes out slightly better than the last one, I do believe that markets can catch a bit off of that. Okay. However, catching the bid is the first thing I need to see. But the most important aspect of that bounce is going to be the bull's ability to hold that value. That is what I need to see. If say for CPI, slightly optimistic numbers come out and it shows hinting of disinflation in the near future, say ES bounces back up to, call it 41.14, which is my key level. That was very important last week. Say it bounces back up to 41.14. If that immediately rejects and then, it sells off back to 3,950-ish, then it's going to be very difficult to hold this long position. However, if it's able to bounce up there and kind of hold value and get defended on pullbacks, meaning buyers are able to step in if ES were to pull back and then create higher lows, right? So say the low gets down to 39.40, right? If it bounces up to 41.14, pulls back, I want to see, say, 39.70 hold or anything higher than that 39.40 low. I want to see ES buyers defend that low and create higher lows and new demand on the way up. That is what I want to see. Okay? So the chances of bulls just stepping in and absolutely causing a rip your face off rally are very, very, very slim. So that, with that said, all I need to see is them hold value, which just has not been the case for this whole year. So that's that. I wanted to talk about, I'll also talk about what I expect for CPI. Probably tomorrow or Wednesday morning, I'll tell you guys what statistics to look out for in order to, kind of have an idea of what they're saying. So I also wanted to talk about some of the plays that I am looking, into going forward. Bitcoin and Ethereum, I started buying. Let's see. All right, so with Bitcoin, I think it's here. Let's see. I have so many different. Yeah, here we go. Okay. So Bitcoin, I started buying at 37,200. I bought more at 34,500. Then I bought more at 31,000. And then I bought more at 30,000. My next buy is at 28,000. So right now I'm just buying one lot at each, which is equivalent to 5 Bitcoin. And then for ETH, I bought some at 2650. Then I bought some more at 2350. And then my next buy is at 2150 and then 2000 if it wants to keep dropping. So these are for longer term. I'm accumulating a buy position, okay? The reason why, and I've gotten many questions about this. People say, oh, why do you scale in? Why don't you just buy at one spot? If you guys know the exact spot that Bitcoin is going to bounce at, please DM me. Please, dear God, DM me, okay? With that said, no one knows exactly where it's going to bounce. So rather than try to pinpoint an exact entry and go in with full size at that one entry, it got, just in case it doesn't work out and, it goes against you, you're going to be very, very, it's going to be very difficult to hold that particular position because you're already full size. So with that said, rather than trying to guess the exact bounce point, what I do is I scale in. So I find a general bounce area, and then I find actual pinpointed levels within that general buy zone. Just so I could dollar cost average on the way down. So say Bitcoin doesn't get to my 28,000, right? Say I think 28,000 is going to be the absolute low. If it doesn't get there and it starts to bounce back towards 50,000, I have a position, right? So for you that wanted to wait for that 28,000, the boat's going to leave without you. So that's another reason why I like to dollar cost average. Same for the ES, right? I don't know exactly when to enter. Say I entered full size ES at 4,050. Right now I'd be down, a lot of money. So with that said, I like to piece into the play just so that I can afford to lose as the price goes against me, right? Because I'm not full position, I'm not full size. And B, I don't have to time that entry perfectly. So Bitcoin, do I expect it to keep dropping? I do, but if it doesn't, if it wants to find, support at 30,000, so be it. I still have a nice position in it. So I'm also looking at Palladium. I have some orders at that weekly demand. This is a big boy contract. This thing moves like crazy. So if you are going to play this particular name, I recommend either playing micros on it or just one contract. This thing moves like crazy. We're getting into stocks. I'm also looking to buy some GDX. This mirrors the price of gold. I believe that GDX and gold are going to make another bull run soon, based on inflation and a few other fundamental reasonings. I was gonna buy this 33 because it was prior resistance, now support, which then lined up with this nice support and resistance level. Obviously, you could see that it did not hold there. I was actually busy doing something else, so I would have had an order there, but I did not. I'll start accumulating this thing at 3150. I'll probably buy it 31. I definitely will buy it 3150, 30, and then towards this 29 area. As you can see, it's very strong support. I'll I want to build this position up to like, I'll probably do like 25,000 shares of this particular name. I'm also interested in AMD, that monthly demand. Hopefully ES does find the bottom near, that 39.50, 39.40 area. At the same time that AMD gets down to this monthly zone, I will gladly pick up shares. Oh yeah, and Coinbase. So Coinbase is pretty strapped onto the price of Bitcoin. So the hedge fund manager in my office, Matt, he actually gave me a really good point today, which makes a ton of sense. So he said, like, yo, they have earnings soon. When's earnings? Earnings are tomorrow. He said he doesn't want to buy going into earnings, but he's looking to buy soon. And I said to him, I said, well, if Bitcoin continues to drop, so will coin. He said, yes, but with Bitcoin and some of the other cryptocurrencies getting absolutely shellacked, right? They're all getting killed right now. They're getting crushed. A lot of them are down, 50% or more year to date. A lot of the novice people, right? A lot of the novice investors that had Bitcoin and had FOMO when it was trading, above 60,000, a lot of them are panic selling. Okay, so when you have panic selling, you have increasing amount of transactions. So the more transactions you have on Coinbase, the more money that they make, right? Coinbase charges an arm and a leg for the commissions. So although Bitcoin and the other cryptocurrencies are heading lower, that is making Coinbase a lot of money because a lot of people are buying and selling based on, the current volatility in the crypto space. And for those crazy volatility transactions, right? A lot of people are panic buying, panic selling. There's just a lot of different volume going in and out of the Coinbase app. They're getting a fuck ton of commissions. So, like I said, that helps their overall revenue. Their profit margins are crazy. So that's something to note. So depending on how they do on earnings, if they do drop on earnings, I will want to pick up some shares of Coinbase too. So another fact, I don't know if you guys know this, this might be obvious, but when a company reports earnings, they're not reporting earnings for this current quarter. These earnings are from previous quarters. Okay, so it's not like Coinbase is reporting earnings tomorrow. They're not including the earnings that they're making this week. These earnings that they're reporting are from last quarter. So technically, you would think, oh well, if Coinbase is getting all of these commissions from the recent volatility, why wouldn't you want to buy tomorrow? It's because the recent volatility is going to be reported on next earnings. So just a little fact there. So that's about it. MSTR, same deal. I mean, this thing's tied to the price of Bitcoin too, but they're only tied to Bitcoin. So if Bitcoin goes up, they're going to go up. If Bitcoin comes down, they're going to go down. Obviously, you could see they're down 60% year to date. The thing that I like about Coin more is the fact that they're making money on this volatility, whereas MicroStrategy is just pegged to Bitcoin's price. So I'm not interested in that one. So like I said, focus on CPI on Wednesday. That's going to be a very, very, very major catalyst. And I'm not going to post the recap video tonight because I'm freaking tired. But tomorrow I'm going to post the trade recap video from last week. I'm going to go over the ES trade that I took on FOMC. A lot of you guys were wondering about that one. I'm also going to go over a few trades that I actually lost last week too. Hopefully this video is helpful. If it is, great. If not, let me know. And going forward, I'm going to have a lot of information to share. I'm pretty fried right now, so I don't know how good this video was. But going forward, I have some really, really good plans to really, really, give you guys a ton of value if you guys watch this. So with that said, I'm going to cut it there, and let me know if you have any questions. Feedback is always appreciated, both good and bad. And I'll talk to you guys soon. Peace.